We're evaluating the fourth quarter of airline major Indigo. They've reported a strong set of numbers for the quarter gone by, and their key parameters, whether you consider their revenue or their profit, even their EBITDA, all parameters have come in higher than what the street was penciling in. The airline has also added that they're expecting their capacity to grow 10 to 12% year on year in the current quarter. Also, we've got plans from Indigo to begin their customized operations for their busiest business routes. So there are plans that are underway, and let's get perspective on what those plans are and how the fourth quarter has been from Chief Executive Officer of Indigo, Pieter Elbers, joining us. Mr. Elbers, firstly, congratulations for the kind of numbers that you've posted for the fourth quarter. Tell us about the main driving factors that have driven up revenues and your profitability as well in the fourth quarter.
Well, thank you, and pleasure to be with you today evening. Well, looking at the results, I think there's a couple of elements, and as always, it's a culmination of different factors. Let me start with the growth of the Indian market. And the Indian market, as we shared earlier, still being largely underpenetrated when it comes to air travel, even more so when it comes to international air travel. So there's a very buoyant market out there, hand in hand with the growth of the Indian economy. That's one part of the story. The other part of the story is really, we launched 2 years ago a strategy which has a lot of different ingredients. One was then to further build our network, to re-emphasize the basics of our product, to make sure that we continue to build our international routes. And basically what you have been seeing over the last couple of quarters, that all these elements are nicely coming together. So on the one hand side, the growth of the market and the buoyant Indian consumers traveling domestic and international. On the other hand side, our strategy, which is really starting to take shape and resonating very well for all the different initiatives.
So yes, while you're talking about strategy and how it's really working out for you, you're saying that you're in sync with the kind of economic growth that we're seeing in the country as well, Mr. Elbers. But these fourth quarter yields, they seem to be seasonally weak. How have these yields been so far in the first quarter of FY25? Is the number better than what you had seen in the third quarter of FY24, or better than that of last year?
Well, we usually look over a year-over-year comparison, because that would to some extent rule out some of the seasonal effects. Although you can also say that last year in the first quarter there were some specific events when it comes to sort of capacity, some developments in other airlines. So there's always, even a year-over-year comparison is challenging. But we would predict a similar revenue environment for this first quarter as compared to last year's first quarter.
Right. So the environment remains similar, at least on that count. But for the first 45 days of the first quarter, Mr. Elbers, tell us about growth in air traffic. Are forward bookings at least indicating that air traffic is likely to get better, or perhaps would remain at current levels? What's the scenario like right now?
You know, I would rather stay to, rather than break it up in 45 days and to the outlook we gave to the for the first quarter. And there's, again, a very similar revenue environment, where, of course, we are today, to some extent, not delivering the capacity we wished we could deliver. We're in line with our capacity guidance, as we've given earlier, thanks to all the mitigating measures. But clearly, the situation with the planes on the ground, as some of the supply chain issues, is something we wished was not there, because that would have enabled us to further grow in the market. And clearly, we had to take a step in Q4 to mitigate some or to reduce some of the initially planned growth, yet still within our capacity guidance. And in this first quarter, we start to stabilize that situation, and really we see that all the measures we've taken, extension of leases, taking in back some aircraft, some damp leases, are really helping us to deliver up to our capacity guidance.
The real reason I'm asking you this, Mr. Elbers, because in the current scenario, you have the elections playing out. And typically in the past, in prior years, where elections have been taking place, there has been a slowdown for the aviation sector. Are you seeing any slowdown because of our current elections?
Yeah, that's probably $1 million or the 1 million rupee question. It has two dynamics. You see certain market segments are slowing down at this point in time because of the elections. Some other market segments where people travel for precisely those reasons we see going up. So I would say in general it's difficult to precisely pinpoint what's the effect on the elections. But if you were to outweigh the two dynamics, I think it would be fair to say that it has some impact. It would be very difficult, though, to precisely quantify what's that impact and what will it exactly do in terms of passengers and yields. Again, the bigger dimension of it, really, I would say, is some of the effects when it comes to some of the supply chain affecting the number of planes being available to operate.
Yes, indeed. But yes, you did also mention, Mr. Elbers, that some cost items would see an inflationary pressure of high single digits to low double digits. So I'm wondering why you have this sudden worry about the rises in maintenance costs, at least as far as inflationary concerns are concerned. How do the maintenance costs pan out? What has changed from what we've seen in the past, say in the third quarter, to what we're seeing now in the fourth quarter?
Well, I don't think it is a sudden concern or a sudden notification. What we have seen all across the board post-COVID is that there's inflationary pressure, especially on some of the supply chain challenges. We also see that some of the airports are increasing their cost levels. So we see some of that inflationary pressure, and I think it's good in all transparency to point it out, as we did in the call earlier this evening. And of course, we continue our focus, as Indigo has been doing all the time, to remain a cost leadership and to remain our cost leadership really in the Indian market.
All right, but that's the impact of inflationary pressures. Tell us about capacity growth as well, because there is a guidance of 10 to 12% capacity growth. So if there is that coming through, where are you deploying this capacity growth? Is it going to be on new routes, and are those routes going to be more domestic or more international?
For now, in the next foreseeable future, I think we have only one international destination which we have announced to be further developed, which is Jaffna. We have added actually quite a significant amount of international new destinations last year. A total of 7 new destinations were added. But importantly, and we continue to build on that, and we've recently also announced new flights, additional flights from Delhi to Phuket. We are increasing our flights to Central Asia. So our emphasis at this point in time is keep the international growth, but we are putting additional capacity to existing destinations, either by new routes or by firming up existing routes. And some of these new destinations, like the one in Central Asia, have been a big success, so we continue to build on those.
Yes, and we wish you good luck for that. But Mr. Elbers, mid-70s, is that the grounding number, as you indicated earlier? How quickly do you expect this number to come down now? How long do you expect it to remain at these levels even?
I'm almost 2 years here now, and in all the things we've been doing, this has been a constant and recurring question, and rightfully so. What we do is we work all the time on 2 dimensions. One is to get as good as possible insight from the OEM on what is the outlook on that, and clearly the changes which were there from the start of the year we had not foreseen. But on the other hand side, to address whatever insecurity and whatever variations there are from the OEM, to address that with mitigating measures. So we expect that the number we have today should go down over time. If you ask me what's the precise timing and the precise schedule and at what point in time will you be at width levels, we just don't have that precise set of information from the OEM. What we do have is the information on our mitigating measures. Most important one, of course, the steady influx of new aircraft. We are in a unique position, I would say, globally, to have more than 50 planes being delivered on a yearly basis. So every week a new plane comes in. That helps us a lot to address the issue. We've taken some additional damp leases, we have extended some existing leases, and we have some flexibility to tune going forward. Therefore, we have felt very comfortable actually also for this year, FY25, to give a capacity guidance in the low double-digit number.
Yes, indeed. To be able to expand your capacities, the availability of aircraft is, of course, going to be a very crucial factor. But also, I was telling our viewers about your tailor-made business product. Tell us more about that. Obviously, it's going to be the option to fly business class. But have you set any timelines through which this is likely to play out? Also, will this first start on domestic routes, or is it going to be on international routes, this product?
Well, thank you. Well, we see the Indian market is evolving and actually constantly evolving. And with the development of India as a country, with the growth of India, with the ability to spend from Indian consumers, with the growing business environment, with the fact that India is in 27 predicted to be the third largest economy in the world, we felt that this was really an adequate timing to start also cater for those customers who are in need of that product. And therefore, we start with that product on what we have labeled as the busiest and business routes of the nation. In the first half of August, we'll further unveil what the product precisely will look like, what routes it will precisely operate. But again, it will be very much geared precisely to those needs. So I would like to draw a parallel here to our recent order for the 350s. This step is significant enough to address the needs for the customers and prudent enough still to keep the basis of Indigo's business model, which has enabled millions and millions of Indians as first-time flyers.
So keeping that business model in mind, Mr. Elbers, tell us about the new routes. How many new routes are you planning to start? Whether it's domestic or international routes in this financial year, how many more are you adding?
Well, this product, I assume that this question is not in general, but focused again on this business product. It is going to be a domestic product, as we announced. The precise number of routes is part of what we're going to share at the first part, in the first part of August.
Yes, indeed. But, you know, Mr. Elbers, in FY24, your international capacity grew much more than your domestic capacity. Obviously, this is also because of a low base, but also because of the incremental capacity that is coming. Are you purposely deploying more capacity on the international side, given the strong growth over there, the higher profitability over there?
You know, we come from a relatively low basis, but I think that time is behind us. We moved in the range of 22 to 25% of our ASKs last year. We had last quarter, I believe, a number as much as 26 to 27%. And we have set a near-term objective of having that number grow more in the range of 30 towards 30%. We haven't given any guidance after that.
Well, whether or not you've given guidance or not, the flight path looks quite promising. Mr. Elbers, it's a pleasure having you discussing the fourth quarter and what you're looking as the flight path in the future. Thank you very much for joining us with your perspective on Indigo's business as it stands. Thanks very much for joining us on ET Now.